Hello everyone, it's James here. This is an impromptu live stream, so welcome to the stream. It's been a difficult day because of a difficult week really, with all the market moves. So, and being traders, I've been involved in the trading, a little bit hoarse of voice as well, as you can tell. But I'm going to do a very quick update. I've got my live stream on Sunday night as usual, so make sure to be there, Sunday Night Live. But I want to go through a few of these charts, considering the massive moves that we've just had on stocks, on Bitcoin, all cryptos, on metals and energies to an extent. Natural gas confusing at the moment. So I'm going to go run through them very quickly ahead of Sunday Night live stream, just to give you an inkling of what I expect going into the weekend and what we can expect coming out of the weekend into next week. So I do apologize for no video yesterday. Of course, it's been a very difficult time. And as a trader, I've been mostly trading. So not doing a lot of content. So we had a slight juggle of content, but we're here now. So this is a sort of a catch up from yesterday and a preempt of the live stream for tomorrow, for Sunday Night Live. So I've not prepared for this. I've literally just come back from the gym and had a quick shower. As you can see, I'm wet and sweaty and hot, but I want to make sure that I get this info out to you now in time, before the weekend. So let's have a look. I'm going to start with cryptos. Now, of course, if you've been involved in this market, you've never seen anything like it. Maybe once in 2022 at the bottom of the last couple of cycles, but Bitcoin exceeded most of the downside targets and got through this major support level, but only to the 200 period moving average here on the weekly chart, which is a very key level. I've got bath water in my ear too. So I'm really struggling along here. Only to the 200 period moving average here on the weekly chart at around 60,000. It's a very crucial key support level. It has been many times, as you can see in the past. In fact, we've exceeded it below it in the past on occasion. So the fact that we've just sort of touched it, not even touched it, means that we may have to get below it or exceed it a little bit. You can see there's another clear support level further down where I've got this black line at the bottom of this exit range for the Trump rally. We've erased all of the Trump rally and we've erased all of the gains of last year, what little there were, and we back down to the 200 period moving average on the weekly, a sharp bounce. Let's have a look at the day chart. I'll tell you what my positions are shortly. Day chart, a little bit of a bounce from the 60,000 region, not very exciting, but it's something at least. I'd like to see a close at the very least above this yellow order block, before we commit to any form of major long positions. I have a very, very tiny 5% long position right at the bottom, but I won't be adding to that just yet. So there is a chance we could get down to 53,000 or even lower, down to the bottom, the entire bottom of this range, with that one blowout spike low that really scared the market back here in 2024 in August, before we launched out into the Trump rally. That was a scary little spike down. And if we get to the black line above it, if we have to, and it's not far below us at 53,000, we may have to spike down again, down to 49,000, so below 50,000. So very, very scary. And that's where we are now. Let's go and have a look at the 4-hour chart. There is some sign that we're trying to claw our way back here, but nothing very dramatic. We've got to get above the yellow block before I'll even think that we may have flipped this market, although I'm willing to try small longs down here at the bottom. Now, my overall position is I'm long on Bitcoin. I save in Bitcoin, so I'm down a lot of money, like all Bitcoiners are. But that's just a fact of life. I think it'll come back. I'm pretty sure. I'm not worried about my long-term savings or long-term account. But we've got to get out of this trade, because I want to use my trading account, which is now, and I believe we're at or very close to the bottom on Bitcoin, to start generating slightly leveraged trades to try and improve my capital and grow that account of coins. So that's where we are, bouncing out. This is the 4-hour chart, trying to claw back into the range. We need to get above it. There's the 20 period. I want to point out one very interesting thing here on the Bitcoin weekly. And you can see on the RSI down at the bottom, the last time we got down to the an oversold RSI below 30, I think we're at 27. I think we just popped up above 30 actually already. But the last time we got there was in 2022 on that bear market drop. There was about an 80% drop. And we got into that oversold situation on the RSI after being overbought prior to that. Now we were overbought and now we're oversold. A very similar picture, overbought to oversold, overbought to oversold. Look what happened when we got oversold on this occasion. It took this is a weekly chart, many weeks for us to even bounce out of there. In fact, we went a ledge lower, and I'm expecting we're going to have to get one of these very compressed paused periods before we get the launch out. Most of the time, Bitcoin, after making a major low, goes into a period of coiling or compression. You can see all these blocks here, and then launches out. And we haven't seen that. We've got to generate that. It could be many weeks and months that we remain down here in this range. Right, now let's have a look at another example of that compression leading out into the rally. Here's another one in 2020. So, up and down, let's get rid of the violence above there. Up and down, and then this compression range on the weekly chart over here. This range here before we launch out, taking many weeks and months. So let's scoot across to where we are. We've come down to the level, and we've got the oversold RSI. Look how long the RSI stayed down there on the last occasion in 2024. We've only just got there now. And from July to the end of 2020, so it took almost 6 months for us to get out of that bottom, and another 6 months for us to get any real momentum up into the next move. We've only just reached here, so it could be 6 or 12 months that we're lumbering down in these ranges around 60, 70, and maybe even in the 50s. So that's Bitcoin. That's all the doom and gloom. However, there will be trading opportunities within that, up and down, trading the ranges, trading the run-ups and the run-downs as we squiggle it out around the bottom. We should be prepared for a range trading environment on Bitcoin now, I think, if we're going to get that compression range for weeks on end. And therefore, if we go back to the day chart, the compression range might be somewhere actually in this block, slightly below the yellow block or slightly into it, somewhere around here. That could be the compression range for the next 6 to 12 months. It sounds dramatic. It sounds very defeatist, doesn't it? But that's the fact. That's what happened last time in 2022, really. It happened a little bit over here, and it happened over here in 2020. All of these compression ranges seem to be required, and lengthy ones, before we get the next leg up. So don't expect us to propel out of here like a rocket ship. We may do, but I don't expect that's most likely case. We could get something like this going back to the Trump rally, where we get a big range, not a compression range, but more of an expanding range, like we got there, literally 6 months ago, 12 months ago, 9 months ago. Instead of a compression range like we had on the previous occasion, we got an expanding range and then launched out for the Trump rally. So it's going to be one of the two, but the common factor is both of these take a lot of time. That one took 6 months, 6 to 12 months. So don't expect to make your fortunes on Bitcoin from this level anytime soon. Notice that Ethereum, XRP, Solana all bouncing out. Now I'm hedged on all of these, but I've started adding, and only on Bitcoin, very small tranches to try and ride this up for the retracement. And as I said, it's probably a range trading environment now. So we're looking for a top probably to re-hedge, ride those shorts down, take those short profits at the bottom, and then ride the longs back up again, hedge at the top, ride the shorts. I try not to sell my Bitcoin. I rather hedge. So I ride the shorts down, take profit, and let the longs run up. But my major hedges are all still in place from around about 90,000, 89, 87, 85, a third each of those levels. I have all of my Bitcoin and Ethereum, XRP, and Solana fully hedged, now nibbling at the bottom. Right, let's have a look at metals. We'll come back to stocks. Now, metals, I've just a hell of a mess here on silver that we've weathered quite well considering. And I'm still, we've been hedged on silver. We're long right at the top. We have an average long price now at about 101. We got short at the top too. We took profit on the shorts at the bottom. And now we've just taken all the hedges off, releasing the long side after moving down. We have a 3-wave Elliott wave corrective formation so far. If it wants to be 5 and become an impulse wave, we'll have to go a lot further down. But if this is an ABC correction, we may have just completed it already and just tagged that 100-period moving average. So I'm just going to draw that the way it looks to me, and the reason that we've now gone long. This is the day chart. Let's have a look at the 4-hour chart just to draw these. There we go. That's nicer, isn't it? So that's leg A, and that's B, and then C down to, we could get a little further actually, but we didn't, down to that next level down there. So that's silver. That's Fibonacci level, the 78.6, the last chance. We might still have to visit that, and that's at about 61 bucks. We're currently trading at, where are we on silver? Why are my indicators? Oh, there we go, 74. So now what we've done is I've taken all the profits on the short side and we've released the long side. I've not yet added more long positions. I'm not 100% convinced this is going to continue to bounce from here, but it does look like an ABC correction down to the Fibonacci support level, at the 786, which is quite incredible considering that we've retraced now almost 78, almost 80% of the move up from that low all the way up to the top. It's because this is a log scale, it doesn't look as dramatic. But if I put this on a regular scale, you can see a massive move down. So we got a little bit trapped at the top here, but luckily we got short and hedged. We had to take profit on the short side of the hedge as we move down. You can't stay hedged forever. And now we're trying to give this a chance to rally out of here. I don't know what's going to happen next to gold and silver. It's the weekend coming up. It's been a violent and difficult week for everyone in the metals markets. But my positions are now long silver, long gold. These are tiny positions still. And generally, at the moment, all of my positions have been reduced considerably in size. And I'm trading very, very tentatively, scared, if you will. That's the nature of FUD, right? That's what depresses markets. People like me, but more importantly, people with much more money than me, who have now got FUD, like I have. And the aggressive traders will continue to trade through the FUD, but they will reduce trade size like I have too. And so we're getting to that part of the market where it becomes, the volume drops, gets a little bit tricky, and it could flip either way. So I don't know about gold and silver. And I know that a lot of people got burnt on the way up and on the way down, some big money. And there's definitely FUD around trading here. Nevertheless, we're long on both gold, silver, and also copper. Copper, we're slightly out of the money. Gold, we're in the money. Silver, way out of the money. But remember, we took profits from the short all the way from the top down at, not quite at the bottom, but some way down. So copper's slightly out of the money, but it's looking good. Let's quickly look at this chart. And a bit of a double bottom there, bouncing back into the point of control. So that's good, but we're still below all the moving averages. This is the 4-hour chart on copper. And on the day chart, it's looking a little bit strong, I think, bouncing off the 50-period moving average. And we're still below the 20, the green one. I thought we could do something like this. And I had this drawn in here from a long time ago and drop down into the pocket and then try and bounce up. We dropped quicker and further. And so we got long into that in that region. Looks like we might try and bounce out of there today. So, with a bit of luck, we will. And of course, a lot depends on how these markets are viewed overall. Are we entering into, the way I view it is we're going to get maybe three opportunities on these markets, or three possibilities. Let's have a look at the NASDAQ. And I'm going to relate it to copper. So 3 possibilities here. We hold this level on NASDAQ, same on S&P, etc. We bounce out of here and we move up into new all-time highs, and we get to my target, which is at about 28,500 NASDAQ. I'm using the NASDAQ as a proxy for all of them. So whatever I say about the NASDAQ, I mean generally about the markets. Let's refresh that. So that's first case scenario. I've now gone, I was short actually yesterday on the NASDAQ. We took profit on the shorts and I went long, and I'm now long on the NASDAQ, but I'm short on the S&P. I know it sounds weird, but I trade each chart as I see it. And so this chart looks to me like we are trying to hold here, and we'll see what happens. Next scenario number 2, is that we don't hold here. We break down through that low, through the 200 period, and we get down to the blob at about 10% correction. Many analysts think this is more likely, considering we've got a double top here. Market's not looking strong. And that's about a 17% correction from where we are. So we want to really get this to about a 10% correction, which is what the markets are more likely to do, 10 to 15, something like that. And that would be, let's see. Actually, it could just be down to this low, down to these lows at this bottom here. That's about 9.7. So it is possible that we're almost at the lows after a 10% correction from the top. However, as I said, I think we could get lower into that blob, and that would be about a 15% correction. That's also possible. So that's scenario number 2, that we move down, small correction, 10%, relatively small, 15 maybe, and then bounce from there into a new all-time high. That's scenario number 2. And scenario number 3 is that we have no bouncing from anywhere and that this market just keeps moving down and we're actually entering a bear market. There are good arguments for all of those scenarios, really. And the best argument for a continuation down below this level is the double top, tweezer top almost, the breakdown, the attempt to get up through the triangle, top of the triangle, the double top failed, triangle top failed, triangle bottom failed, and now we're testing the next black line down below us. That could fail too and send us down into the blob. Nevertheless, I'm long, and I'm also long on the S&P. I'm short on the S&P, so I'm fully hedged really on stocks. And I'll give these a chance. Now, the S&P stop is at break even. So if we do move up from here, there's no risk on this trade. So I'll stop this out at break even and potentially get long on the S&P. If that does occur, at the same time, the NASDAQ will move up and put us into profit. So no matter which way this market moves, I think at the moment, we're probably likely to end up profitable. So I really don't know. Gold collapsing down through support. When you look at these moves that we've seen on gold and silver, not so much copper. Copper's been a little bit subdued compared to these other two, but gold and silver, 20, 30% moves. And then Bitcoin crashing down to these perilous levels. Right, now we've covered stocks. Now the dollar, I think, is part of this whole game and the key to some of it. And if we can see the dollar getting rejected from this resistance level, and it might well do, we've got a cluster of 4 moving averages above us. We try to get through support, very important support on the dollar index. And we were short, long on this one. I got long at the top there, long at the bottom, and we got out of the gray arrow for a small profit. But when it got to this line for the 3rd time, we had a beautiful double bottom, tweezer bottom. When we got there for the 3rd time and crashed through it and immediately rejected, it tells me 2 things. First of all, this line has been weakened. And secondly, there's quite a lot of buying interest in this level. And we also gap down into it. So violent move into the zone and a violent move back out, showing that this is an important level, but it was weakened by the thrust through it, creating a new low. So there's very good argument for the dollar continuing to move down from here. And we're only at 97. I think we can get to 92 on the dollar and not be worried about it at all. I think once we start getting into the 80s on the dollar index, it gets a little worrying. But around about 92 to 95, maybe 90, is a very good place for the dollar to be at for the US and for global markets and risk assets in general. And I think that's what might be where this might go. So we could get a 500 or 1,000 pip drop on the dollar index. I'm not saying it's going to happen. There's no evidence of it just yet, but we've got the moving average cluster above us. We're rejecting somewhat slightly at the 20-period moving average. And if it starts moving down, I will try and get short on the dollar. And I'll also have a little bit more confidence in the long positions, or the long side, rather, on things like the stock markets, S&P, NASDAQ, Bitcoin, maybe could do with some stronger dollar. And then if the dollar does, weaker dollar, and if the dollar does weaken, that could also propel silver, gold, copper, etc. Now, copper and silver have become increasingly important in this new industry involving electronics, electricity, and AI and data center cabling, and of course, just transport of all of this data, electricity. Copper is really important, and so is silver, 2 of the best conductors around. And so if we see copper continue to hold firm and rally, it's a very good sign for the markets. And we could see all of this moving up at the same time. But it would help, as I said, if we could get that dollar index just rejecting from somewhere around here and moving down out of this point of control on the chart. By the way, we have a very powerful Bollinger Band squeeze here on the dollar index, squeezing in, but we are diddling in the middle. And notice that the RSI is stuck dead center. So we've got no edge in terms of overbought or oversold. And we did get oversold when we got down through the lower 200-period Bollinger Band and that support level, got oversold, bounced out. We took profit on the longs. And now I think we may have to revisit that low again and see if we can get further down. So that's the dollar. And then we must go on to natural gas. Now, I'm still short on natural gas from this red arrow. I must remove that. We hedged it, unhedged it, and I'm still short. We've got various reversal candles, a hanging man, a 1 up, 1 down, doji full stop candles, another one over here, moving down on the last 4-hour candle. This one now moving up. This hanging man doesn't look strong to me. It looks like we'll move down. The 20-period moving average is curling up. We've got all the other moving averages above us. And for the last, well, since the 2nd of February, and it's now the 6th, we've been moving sideways mostly across in a slightly lower range, and then a minute leg up, and then across in a slightly higher range. And we could just get a minute leg down, or another leg up into these moving averages. I don't know. But Friday, often natural gas sells off in the afternoon. Not last Friday. Last Friday we had a big rally on natural gas, and perhaps this Friday is going to be a sell-off. This is the futures here, and let's go and have a look at this chart. And I thought we could, get a bit of a dip, and I still think we can. We've got some gaps below us still that might need to be revisited. This is the futures chart. Let's go to the day chart, and let me just point them out. So there it is there. That gap's actually been closed now by that move down. I'm not sure if it was completely closed. No, it wasn't. So we still have an uncompletely closed gap down there with the bottom at about, well, just under $3. I think we just about tagged it on that move down. So that gap might be dealt with. That gap is dealt with. And then we've got gaps above us, of course, as well, a massive gap above us on that rollover gap, weekend gap. This one over here. So, now that we've dealt with all the gaps, I think this one has been finally completely dealt with. We didn't actually get to the bottom of this gap. That's the point. Let's just zoom in there. The point that we need to get to on this gap was 3.12, and the low of this move, let's zoom in, was 3.15 really. So there's a 3-cent difference between that low and the bottom of the gap, unclosed. So that's going to be beckoning. Then we've got this gap above us here, which is a weekend gap, which is very strongly beckoning. And then we've got a very large rollover gap to the left over here. And I think all of the other ones, apart from that, have been filled, apart from that little one there. So tiny gap fill below us, a much larger one above us. Neither have been filled, and we'd be going sideways broadly across the page. I thought we could get slightly down below that gap, clear out this low, and then bounce up there into a higher range. And I think, as I said, and I keep on saying, I think natural gas is likely to trade between, I think, roughly $3 and $5.50 this year, as opposed to $1.50 to $3.50 last year. And so my bias is slightly higher, to the upside. But I want to be buying at low levels. We're quite low now, but I think we could get lower. And we're kind of diddling in the middle. Remember, we've got a gap below, which is partially filled, a gap above, which is completely unfilled. Maybe that's more powerful as an attraction. But no matter what, we've got a nice range now. We've got a flat top breakout, and we've got a flat bottom breakout. And so if we break out through the bottom, we'll be fine because I'm short. We'll add some shorts. And of course, we're going to get through the 20-period moving average here on the 4-hour chart down below there. And then I'll add some shorts to the existing shorts, try and ride this down to just below $3. If that doesn't happen, and we move up from here, and I'm going to draw a line straight across the top, then what I'll do is I'll hedge the existing short, which is literally a 10% position, as small as I normally trade. Although I did put 2.5% size longs on Bitcoin last night, 2 of them, so 5%. But normally in normal trading, 10% is my minimum size. So I'll hedge the 10% shorts that we've got and add 10% longs, meaning that I'll be 20% long, 10% short, bias long. And then we'll try and see if we can fill the gap to the top up to about 427. And then, maybe we can keep going up to higher levels into the 5s. So that's the plan. If we break up through there, I'll hedge the short, add some longs. If we break down through this, basically the bottom of this order block and the 20-period moving average, I'll add to the shorts that I already have on and try and ride this down to about $3 or just below, and potentially slightly below there. There is another gap even further down, I think, actually, but I think we've got to go a very long way back below $3. I can't remember. Someone may have pointed it out to me. I don't think so, though. I think we're okay. So that's it, really. Tiny gap below us, partially filled. Large gap above us, unfilled. But I'm short, and I'm thinking we could fill the lower gap first and then fill the higher gap. But as I said in the video on Monday, in the natural gas video, it may be that we have to fill the higher gap first and then the lower gap, which means that we might have to go up a bit, but not carry on, then come all the way back down to the lower gap, fill that, and then continue on upwards or even downwards. Of course, weather and war dependent, and storage dependent, and Henry Hub export terminal dependent, and all that sort of thing. So yeah, so I think that's it, folks. That's basically the plan. I'll hedge the shorts and add longs if we break up above that level, and close, of course. And if we break down below the 20 period and this flat bottom, I'll add to my short position, try to write it down to about 3, maybe below, and then bounce out of there back up to about $4.40, maybe actually the top of the gap rather, $4.27, and then see if we can carry on through there. Obviously, I'll hedge or take profit if we get there. And that's natural gas, folks. And then WTI oil, I'm still short. This has barely moved in the last few days. And of course, with what's going on in Iran and Hormuz, and dare I even say the Epstein files, which seem to have affected Bitcoin unbelievably. I don't think they've affected oil though. I hope not. You never know. Very weird stuff, man. Anyway, so for a number of days, a week and a half really, we've been moving sideways underneath these highs. And just remember, if we do get drama, further drama in the Middle East, not necessarily war. War will not necessarily push this to the limits at all. We've seen the results of war shocks up here, and these spikes, quite muted spikes, and they barely last. These are all as a result of tensions with Iran and Middle East, and even some of the Russia-Ukraine stuff. So I don't expect a big problem. And of course, every time we make these higher highs, we also make every time we make these highs, where's the trend line? Every time we make these highs, they're actually lower highs on oil. So it's a downtrend, although it may be in a falling channel. And I'm going to put this line over here too at the bottom. Let's reclone it and see. I'm sorry if this stream is a bit higgledy-piggledy, guys, because I've literally just come from the gym. There, that's a nice line. And just gone straight live just to make sure that you've got a little bit of gen. And I will try and answer some questions if I can get there, but I think it's going to be tricky to see what's going on because I don't have my whole upper set up. So, but good day to everyone. It's really nice to see you all. And I know there's a lot of chat going on in the chat. So camera quality is poor. All right. It seems to be okay here. All right, folks. And I think that's it, everyone. Just a quick note on commodities. I've taken profit on soybean longs from 1063 at about 1,120. And I took profit on my wheat longs from about 514 at about 540. I'm just, not because I don't think these are not carrying going up, but I'm liberating capital to allocate elsewhere. And if these markets do turn around, like stocks, looks like they're bouncing vigorously as we're talking. Big move on the NASDAQ, S&P. So remember, we're long on the NASDAQ, short on the S&P, stops at break even on the S&P. I'm long on a number of names here too. And the dollar, as I said, we want this to move down a wee bit to boost up everything else. And you can see it's just trickling down here on the day chart. Let's look at the 4-hour chart, moving down a fraction. And if all that goes quite well, it could put a little bit of a bid under some of these cryptos. XRP doing well today, Solana doing well, XRP, Bitcoin trying, and Ethereum just trying. Folks, that's all for now. I hope you enjoyed the stream. I know it was higgledy-piggledy, and I believe it may be that the audio quality is not great either, or the sound quality. Is it a good time to start closing shorts on crypto? Eddie, we have a very specific plan on crypto that we've spoken about in the live stream. So let's just go with that plan. It's up to you. If you want to close your shorts, this might be the low. We may bounce out of here and carry on higher and never come back down to 60 again. It's quite possible, even likely, I suppose. But there's a very good chance that we could move lower. When I say very good, I mean it's better than 10%, which is high enough for me. So I don't think we should be closing shorts just yet. But I am adding tiny tranches of longs. All right. So camera quality is poor. Is it bad? Okay, folks. I think we have an audio quality. Speak soon. Take care. Hope you enjoyed the stream.